digging in the crates for something good. Hidden gems often misunderstood. 'Cause you know there's no such thing as too much. Miscellaneous important stuff.
Welcome back to the show. This week, my brother was here, my brother Ryan, and Ryan is a financial service representative at a credit union. So we talked about car loans for a while, what you can do to put yourself in the best position when buying a new car, but we also talked some about financial responsibility and just some things that you may want to know if maybe you haven't made a big purchase, maybe you haven't applied for a loan before. I know I learned some stuff, so it was a lot of fun. I hope you guys enjoy it too. Here it is. Are you ready for this? We're going to start the clock. I'm trying to make this a new thing. Usually I start the clock and then do the intro, whatever. But I'm going to make this part of the episode now where I start the timer. Even though nobody can see it yet, this is kapoop. This is the new timer. You ready? Ready?
Yep.
3, 2, 1.
Timer on.
Timer on. Okay, Ryan. Tell me your job title right now and talk to me about what you do on a daily basis at work.
I'm a financial service representative
Woo!
at Oklahoma's credit union. And my daily task at work is finding you that money that you want to buy that thing.
What does that mean? Like finding me money in the money I already have?
Whether it be like a car loan or personal loan.
Are you the guy that says, let me see if I can move some money around and we'll see if we can afford this?
No.
Okay, because that's what when you say find the money, that's what I think of. Like, I'm going to have to move some money around from savings to checking.
I look at your credit and tell you whether or not it's responsible for you to purchase something. And sometimes people listen and sometimes people don't.
Well, what happens when they don't listen?
They go and get a 30% interest loan at One Main Financial.
Can you do? Oh, is that the those letters I get in the mail?
Yeah.
I think I just looked at one of those the other day.
There's a lot of predatory institutional lending in the United States.
Where the one you just got, where you got it in the mail, and then on the back of it, you can just sign it and then take it and cash it?
Yeah. You can get a check for $5,000 and you go cash it and it starts a loan and eventually you get a bill for it. And people go, oh, I don't remember getting out a loan.
I just thought I got a check.
I got a check in the mail, though.
I cashed it?
I got to pay that back?
Whoops. Is it really that high, 30%?
Some of them are.
I mean, I guess it's like some credit cards if you don't have good credit score.
Yeah.
All right. So if I want to get a loan, a car loan, well, talk to me about that process first. Should I be going to you or should I be going to a car dealership?
It depends on what you're doing. So I think for a lot of people, something starts going on with their car, or they see somebody else bought a new car, or they just feel like buying a new car. So what do? They start kind of eyeballing the car dealerships, looking online, looking for reasons why they need to buy a new car. And they just it's kind of a spur of the moment decision. And they decide to go trade in their car where it is and then buy a new one.
In the moment.
And generally, it seems like a part of that thought process is this...
Did your phone just go off?
I think it did.
Okay, it's fine. I just didn't know what that sound was. Go ahead.
Isn't how am I going to finance this, or what are the interest rates right now, or what's my actual trade-in actually worth, or it's just such a spur of the moment purchase that people just go ahead and do it without thinking about the financial aftershock that's going to happen after they buy that. So if we're talking about the most responsible way to buy a car, the best thing for you to do is to start out by going to your bank that you bank with, the credit union you bank with, and speaking with one of their loan officers and getting a pre-approval. And that pre-approval process, if it's done the correct way, at any financial institution should be, they're going to look at your credit. They're going to say, with your current financial situation, this is this is the cap that we're going to put on how much we'll finance for you. This is your interest rate that you qualify for. And this is how long we'll finance this loan out for you. Because the fact of the matter is, if you go to the dealership, if you're not a financially savvy person, if you want that 2019 Dodge Charger and you work at McDonald's, they will find a way to get you in that car, because after you purchase it, it doesn't matter who it's financed with, you're not their problem anymore. You can't just come back around and take that car back in.
They get paid.
Exactly. So then it becomes Bank of America's problem, who gave you the $40,000 loan with your McDonald's salary.
Do you know how I got my first car? You know that story?
No.
No, I mean, the first car I bought new, and it was a cheap first car. And of course, I didn't know what I was doing. My Geo Metro was falling apart.
Chevy Aveo?
Yeah, Chevy Aveo. Bad decision. I needed a car. So I went in. I knew I wanted that one. That's what I did know for sure, because I knew it was the cheapest new car you could buy. All the basic stuff, roll-up windows, all that. It was like $10,000 or something.
Oh, yeah.
But apparently it didn't come with an air conditioner, so I had to pay more to get that in there. And then once they got us in the office, they were preying on us, because I was there. I think it was just me and our mom, and they made us wait forever. And they came in there and they told us, they start showing us payments, and then he started showing us a list of warranty things you could add to it. And they never showed us what the price was. I never asked what the price was with that added on. He would just show us the new payment. He's like, here's what you can get it for monthly.
Yeah.
And of course, now I know better. That was a lot of years ago. But I ended up, I think, paying like $16,000, more than $16,000 for that car, because of all these things that they added onto it and persuaded us to get. And I just remember thinking, I'm never going to do that again, because that was terrible. And I could afford it. It wasn't a situation where they got me in a car I couldn't afford, but they added things onto it that I never used. And if I would have gone to my bank, it probably would have happened differently.
Yeah, and the other thing is, there you say, yeah, you could afford it, but part of the thing you want to look at with a car purchase too is, when we're talking about affordability, you only want to be paying for that car how much it's worth. And that's another thing that often happens at the dealership is, the sticker price is going to be $20,000 for your new Nissan Altima. But they're going to come around and tell you that you need an extended warranty and you need gap coverage on the vehicle.
Oh yeah, got gap coverage too.
Mm-hmm. So if we're talking about a $20,000 car, most of the time they're going to be selling it for you at whatever the black book or the not a retail price of the vehicle is, which is fine if you buy it for that and you do it over a responsible 5-year period to pay it back. By the time you're done paying off that car, it'll still be worth $8,000 or $9,000 probably. But when you add on $4,000 or $5,000 of back-end products, so like warranties and gap insurance, by the time that you actually pay off that vehicle, if you do it in a 5-year period, I mean, it's going to be worth nothing.
Yeah. That's why I need to get into that. I need to get in the business of all these warranty companies and start selling car warranties.
Are you sleeping well now? Because if you're sleeping well now, you might not after that.
You're right. I have a conscience, so.
Yeah. Well, I mean, if we just talked about strictly warranties right now, so most banks and credit unions will sell their own warranties, because we all have our own relationships with warranty and gap coverage companies. So we purchase, or we facilitate those products, and then of course we get if you're selling somebody's products, you're always going to get some kind of kickback. But for me, with my credit union, with a credit union in general, the idea is for everything to be for the benefit of the members. So we basically sell everything for at cost that we get it for. So I know that when we do our gap insurances, I think there's $100 that stays on our side because we facilitated all of that to make it happen. But we sell ours for $499 for the whole life of the vehicle. In most dealerships, it's $900, $1,000. And that's a big chunk that stays there with the guy who sold it to you. And that's, what he uses to feed his family, out of his paycheck. But that's money being taken out of your pocket that's not doing anything extra for you.
How do we fix that?
Buy stuff at your credit union or your bank. Or don't get it if you don't need it, because I also hear horror stories of people either buying products from dealerships that didn't pay out when they needed to, bought things that didn't cover their car, people that are sold gap insurances that they didn't need because their vehicle when they bought it was undervalued. So specifically for like gap insurance, most people don't know what that is when they go to the dealership. So whenever you buy a car, if it's worth $15,000 but you finance $18,000, then whenever if you get into a wreck, God forbid, your insurance is only going to cover how much the car is actually worth. They're not going to cover all that extra stuff that you put on top of there. So the gap insurance is what pays off that extra piece. But if you buy a $13,000 car and you only pay $11,000 for it, you don't need the gap insurance because your insurance is going to cover it if you do get in a wreck. But a lot of time that will still be pushed on people. They'll give you scenarios where, oh, well, if you got to refinance the car and extend it out longer, it might not be worth as much if you get in an accident in 4 years. So you should probably still get it. But that's all stuff that's just being thrown on you that you don't actually need.
So how much is being added on for gap insurance typically?
Most places, usually $800 to $900.
Which is insane.
Yeah. When you can get it for $499 or maybe even lower at some other credit unions and banks. Because you don't have to pay out that extra bit to the dealership for their kickback portion of it.
Yeah, and it's interesting, you're talking about them not paying out in different scenarios because, for them it's all a numbers game anyway. They're betting on you never needing any of this stuff.
Yeah.
They have to, it's like a casino. They need more people to buy in and less people to ever need it.
Yeah, exactly. And they're hoping I also feel like a lot of people, if you're not the one asking for it when you're there at the dealership, if somebody else told you needed that coverage on your vehicle, chances are if you get into an accident and you're at, you're speaking with your insurance, you might not remember you had gap insurance.
Yeah.
And then you just don't use it, even though you spent $900 up front, but now you don't remember you had it. And that's the end of that.
Yeah. The stuff that I added on, the warranty and the gap insurance and all that, I feel like there was probably a situation where I could have used something in there that I added onto my purchase, but I forgot what I bought. In those scenarios, I don't remember. It may have been useful at some point, but it didn't matter. I didn't use it, so they won, and I got nothing.
Yeah, and that's with all of my members that I deal with that I've done car loans for and everything. I'm their point of contact. So if they ever have a question about their warranty or their gap insurance or their auto loan or anything like that, they can call me and I'm going to look up everything they do or everything that happened on their loan. I can tell them about their coverages on things, give them the right phone number to call to call in and get the process started for all of that. But if you buy something from a dealership, the guy that sold it to you, he's probably not going to be working there in 6 months. And they're not as apt to help you out afterwards after you bought the car.
Yeah.
Because they've already gotten what they want from you. Your credit union your credit union, your bank, whoever you're with wants to take care of you for, your whole life. They don't want you to leave and go to a different bank. So they're going to do everything they can customer service wise to keep you there. So it's almost like the Allstate slogan, which I can't remember now.
But it's definitely like the Allstate slogan.
Yeah. I'm just imagining the guy in my head.
Well, I'll look it up. We'll find out right now. Just keep talking. I'll find the Allstate.
Like a good neighbor, State Farm is there.
That's
State Farm.
State Farm.
Yeah. All right. Well, they all have the same logan. They're gonna be for
I'll give you one more shot. What do you think it is?
And I really can't remember.
All right. You're in good hands.
Hey, same thing. See?
Yeah, well, of course. They're all the same, really.
Good neighborly State Farm hands. is what
Yeah.
you're in.
That's the one thing I wish about my current car purchase is that I would have stayed with the bank. I got pre-approved for a loan, went in, got my first car was like 10% interest, which is crazy. And I even co-signed. But this one I think was like 2.5%. And then I went into the dealership and I was like, I already got a loan, but this is the car I want. And he's like, well, we can give you the car at this price if you'll let us at least take a shot at financing. I was like, all right, that's fine. You can try. And then I went in there and of course they gave me an interest rate higher. And I was like, well, no, why would I? He was like, it's very close. It's only it was like 0.25% off. I was like, yeah, but why wouldn't I just stay with my bank if it doesn't matter to me? Like 0.25% is still 0.25% and it's through my bank. I use and he's like, well, it's as low as we can go. And then he left the room forever and they came back. He's like, all right, of course, we really had to jump through some hoops, but we can meet that interest rate. And I ended up going with that because I could get the car that night, but I still wish I would have held out longer and they would have lowered it. But it's like that game, that back and forth where they lie to you and say, we can't do this, we can't do that. And even though they know they can,
Yeah.
it's frustrating. It's why I hate dealerships. It's why everyone hates most dealerships.
Yeah. I mean, it's a weird monopoly.
Yeah.
But there are even new places that you can buy a car that you don't have to deal with that though. So
Yeah. Name one.
Carvana.
I was going to say Carter Chevrolet, but
Carter
that's only because I help do the advertising for them. So, no, but that's, I haven't bought a car with them, but those are the reviews I've heard that their prices aren't like jacked way up. They're about as low as they can go and still make a little bit of money. So there's not so much back and forth. They sell a lot of cars because of that. They make a good deal with you.
Yeah. And
So that's nice.
it's they completely got rid of the barter process, like you're saying. So whatever it is for
Carvana?
whatever they're selling it for on the website is what you're gonna pay for it. They'll take your trade in. They'll come pick it up whenever they bring you the car. They'll let you drive the car for 7 days before buying it.
See,
I've
didn't
had
know that.
very few people have seemed interested in buying a car that way, but I think it'll be the way that I buy my next car.
Because just you saying that little bit about it, that's I think the same thing. Because what I hate most about buying a car is knowing that you're gonna have to get your game face on and go back and forth with them, and then the entire time, even afterwards, you're thinking, did I make the right decision? Should I have pushed harder? Did I get a fair deal?
Yeah,
And not everyone's good at that.
and there's no such thing as a 7-day free test ride at a dealership.
Now, when it's off the lot, they're like,
It's yours.
go
Done. Yeah.
on to the next one,
Mm-hmm.
because they're just trying to make money. They don't care.
No.
So-
Now, I feel like I'm painting a completely bad picture. I mean, I feel like there are plenty of good dealerships, just
There
like Carter
are,
Chevrolet. But the general picture.
Yeah, I'd say the
is
majority of them that they're trying to get the most money they can out of you. So if they can sell you a car for $2,000 or $3,000 more, then they're not going to say no.
Yeah.
And I think some people may go into it wanting to give a fairer deal. I feel like you get in that culture and you probably just get swallowed up by it
Yeah. Oh,
because you're like, oh, everyone else is doing it. I guess that's just the way it is. Now, I don't know that to be true. That's just what I imagine.
yeah. Or when you see that Bill's paycheck was $14,000 and yours was
Yeah.
one.
You're like, oh, you're
1,500.
selling rock bottom prices there. Well, that
Yeah.
sucks for you.
Yeah. You get that upcharge.
Yeah. So wait, tell me. I've only heard of Carvana, but I don't know a lot about it. So
it's completely online car buying. You buy or everybody. Well, to start things off, everybody starts looking for a car online now. Nobody just shows up to Bob Moore
no.
to look for a car. You've already looked on their website,
Yeah,
seen
you
what
do
they
the
have.
research.
Yeah. And you walk in there and you still get slammed and turned sideways. So Carvana is the same way. They've got all of their cars online for you to look at. Their inventory is always revolving because people are always trading in their car and getting a new one with them, and they're buying cars from other places. And but they have all of their cars go through like 100-point inspection. There's like 400 pictures of each car. They basically do like a virtual view of the entire inside of the vehicle and the outside. one thing I've heard people be ask me to be worried about is like, what about small dings and scratches? When you pull up a car, if there's a small scratch or ding anywhere on the outside or the inside, they have a blown up picture on it. It shows you the detail of what it looks like. Small scrape on the outside will show it in full detail. Like, it's full disclosure. There's not going to be any surprises with the cars. The people that we've had that have bought a vehicle through them, absolutely no complaints. Because whenever you do get it, again, you drive it for 7 days, you're going to look and find all of the little dings and scratches. If you walk around, if you don't want it anymore, they'll come and take it back.
So they come pick it up from you.
Yeah, they come in the little flatbed truck.
Like you're getting your car towed away?
Exactly. Lower it down. If you had a trade-in, they'll take that back. Then give you your car.
See, they're smart. I feel like that is the way of the future.
Yeah.
Because everyone wants more convenience. They don't want to waste time going from dealership to dealership. They just want to get their stuff.
Yeah.
That's what most businesses are selling now. It's time. Like, I heard that argument, not even argument, just explanation of Uber and Lyft and Postmates. All these businesses are saving you time. She's like, I want food, but I don't want to have to go get it. I want a ride, but I don't want to wait forever. Like,
yeah.
It's time. So if I can buy a car without the hassle, it's way better than going to a dealership. I might even pay more for it, a little bit more, because I know I can just get it done.
Yeah. And I mean, with their car buying process too, generally whenever I have someone that's going to do the standard route and just go to a dealership, some people find it, a day after I do a pre-approval for them, but most people it's like a 2, 3, 4 weeks. Whenever somebody has one of those Carvana, where they look that way with their pre-approval, it's usually a matter of a few days. And like I said, most people stick with that first car because it's so, open about the quality of the car whenever you're looking at it.
Yeah. Huh. So give me one of your horror stories.
Horror stories.
Difficult people or someone who had a terrible experience and you tried to talk them out of it.
Oh man. Two come to mind. I had one guy that bought his car from an auction. This is like a salvage auction. So these are cars with salvage titles where some insurance company deemed the vehicle a total loss. But he looked at it and was like, I can fix that. And whenever I was initially talking to him, he wanted to get a pre-approval to buy a car. And then I was like, okay, this is what we've got you for. And he called me and told me that he was at an auction and, this and that. And that was something I hadn't gone over with him when we initially talked, because he was talking about doing a private seller or going to a dealership. But he called me and said, I bought this car at auction. I said, okay, what kind of auction? He said, a salvage auction. I said, well, what car did you buy? Because now we need to find out whether or not we can even loan on the car, how much you spent on it. So generally if places, when we're talking loans, we won't do full loans on a vehicle if it's got a salvage title, because it's not worth that much anymore. Yeah. So maybe we'll do 70% of the rough trade-in value of the vehicle. So if it's worth $15,000, we might loan out like $6,000 on it. So there's a situation like that. So he ended up just purchasing outright with his own money, finally getting it fixed and getting a rebuilt title on it. And then I basically did a loan to refund him that money. But that process for him to rebuild that vehicle, I also was under the impression when he bought it that he was, like mechanically inclined, but I guess he had never worked on cars before. So he had to deal with a bunch of different body shops and he just kind of dragged himself through the ringer with everything. And at the end of it, when we were doing the loan to kind of replenish his savings that he had spent, he was like, I should have listened to you when you said it would be easier to buy a car at a dealership. Generally, yeah.
I mean, I guess you could get lucky, right? You could get a good car at auction like that.
I mean, you seem like it was driving fine now, but we're talking about people being in the business of saving you time. That did not. That was a 3 or 4 month period where he was just working on that car.
And for what? When he could have got it in a day.
Yeah.
What car was it? Do you remember?
think it was a Toyota RAV4. It was like a 2014.
Man,
So RAV4s are nice. They do pretty well.
how much did he spend?
At that auction,
Yeah.
I think it was 7,000 outright to buy that car. It's
So he
worth.
spent his own money because he was only pre-approved for a loan, right?
Mm-hmm. Yeah, but if you were to resell it to a private seller, he could probably get like $16,000 for the car now that it's rebuilt. But he's always gonna have to. It's got a different title. He's always gonna have to disclose that it was a total loss at one point. So that's gonna scare most people away from ever buying that car from him.
Probably would me, because I'd be like, well, let me look somewhere else first.
Yeah, let me look for a certified pre-owned.
Yeah, like I'll come
Yeah.
back to you maybe if I'm desperate.
Yeah, exactly. If it's the last car on earth.
Yeah, but I don't know. I
to buy.
don't trust it. I don't need a car that bad.
Yeah.
Well,
Most people don't.
if he's a good salesman, he could probably find somebody.
Yeah. That's true. But then I had another guy. He had a problem with one of the dealerships where he was also looking for a really good deal. Was looking for the car that was way below market value everywhere he went. And I was like, I'm always urging, spend the extra $2,000. You're not going to regret it. There's a reason that car is priced that way. And of course, he buys I think it was a Ford Focus.
At a dealership though.
At a dealership. Immediately started having problems. Fought with them for a month and a half. Finally, he got them to do to take it back because he kept taking it back to the repair shop. They were like, it's fixed now, break down again. Take it back, it's fixed now, break down, back and forth.
Jeez.
And so they finally took it back, put him in a similar car, but he paid that little extra that we had talked about at the beginning. And that car, haven't heard any complaints about that one so far. So sometimes looking for the good deal doesn't get you. It gets you pushed further back than getting you ahead.
Yeah, because they're just trying to get away with something maybe.
Sometimes you're just trying to save money a little bit too much. It's not worth it.
Yeah, if it seems too good to be true, it probably is.
Yeah, and that's one of my main points with people when they're buying a car is a lot of people look at it as a turnaround. I'm going to get another one in 2 or 3 years. It should be thought of more as an investment. I'm in this for the long haul. When you get the loan, you should plan on, at the very least, or your plan should be to pay out that whole loan. It shouldn't be to trade in the vehicle.
Yeah.
You should have it in your mind that I'm signing this contract for 5 years, 6 years, or 7 years. I'm going to have this car this long, and then, maybe I'll think about trading it in. Can you do something before then? Absolutely. Someone will find a way to get you into a new car if you want it. But your plan should be to follow that whole loan out.
I think my goal moving forward is to pay off a loan or pay off a car quickly and then trade it in more frequently, but then and probably get a similar price car, and then I'm only going to pay like a few $1,000s or $5,000 or something. So
Yeah.
so I can like keep my car updated. I mean, I'm not there yet, but that would be my idea, is like I can still trade it in while it's worth a lot instead of keeping a car for 10 years like I've done before.
And that's also important when you're looking at cars to buy, if that's your plan, which that's a good one, to pay things off quicker and be able to trade it in. But with a plan like that too, you also want to make sure that you're buying a car that holds its value well, because there are some cars that definitely don't. Like a new Land Rover is going to hold its value way better than a 2019 Chevy Sonic. Chevy Sonic's going to depreciate real fast.
Woo, Chevy Sonic though.
Yeah, sounds cool.
Yeah, what are the worst cars to buy then?
I'd say
Besides Chevy Sonic.
the ones, the Chevy Aveos, probably.
Yeah, I know.
Those, when you're talking like Geo Metros, Chevy Aveos, Ford Focuses, can't even Dodge Darts, things like that. That's a car that you buy. You're only spending $13,000 when you buy it. That's a car you buy and you hold on to for 9 years. And
Yeah, which I did. So I'm very proud of that. I had several years where I wasn't paying any loan on it, so it was great.
You're at a different tier of purchasing, I think, at that point.
Yeah.
Everything you buy when you're buying things for those prices, you try to hold on to for as long as you can.
Yeah, I didn't want to give it up when I did. I was just like, well, it doesn't even make sense for me to keep it anymore.
Yeah.
I like
I should get
broken
a
air
new car.
conditioner. It's leaking coolant. Like, I was gonna spend more time and money on it than it was worth. But I had a good run. I missed that car.
So you one thing I definitely want to touch on is you had mentioned that your first car was at a 10% interest rate.
Yeah, let's go back to that.
Yeah, and so that's
High.
that's the biggest mistake you'll see people make. I understand fully that not everybody's credit is going to be fantastic. Credit's a snapshot of where your whole credit picture is that day. So you could have a 611 as your credit score this month. 8 months from now, you could be back to a 740. And I understand that sometimes your car quits working whenever your credit's not in the best place. But one thing you'll tend to see people do is, repeatedly buy vehicle loans with high interest rates, which is just disastrous almost.
Put you in a hole that's hard to get out of, I'm sure.
When you talk about the depreciation of the vehicle and wanting to trade it in, if you buy a $20,000 car on a 5-year loan and you pay that for 2.5 years, if you want to go and trade it in, you've paid enough off the principal that whenever you trade it in, you're at least going to break even. But if you do that same car and you got it at a 9.5% interest rate and you go and trade it in, you're going to have negative equity that you need to roll over into the new vehicle. And if you do that enough times in a row, now you're stuck with whatever car you're at. And if something happens with that car, now you're $10,000 upside down in it, and you can't go and buy a new vehicle. And that's something that we'll see quite often, is because people keep doing that trade-in game when they haven't committed to paying enough off of that loan yet.
And they probably just don't want to think about it. They're like, if I get this new car, I'll feel better, at least for now.
Yeah, I think that's usually a big part of it, is if you don't ever actually see the money changing hands, if you just know that you went in, they took your car and you got a new one, your payment stayed the same, you're not seeing the actual tally of your principal balance just keeps going up. And that's
It's the American way.
Yeah, that's the game dealerships and everybody likes to play, is what monthly payment are you looking for?
Yeah, I hate that game.
Because I can give you, if you want a $350 monthly payment, I can get you in a $20,000, $25,000, $30,000 or $35,000 car. It just depends on how long I'm going to finance you for. And most people won't focus on that. So,
Yeah, monthly payment's important only after we talk about the lump sum, though. Like, I don't care about the monthly payment until I know the other
exactly.
number.
Yeah.
So how far out should what's too long of a loan?
Well, you'll find that most 84 months is usually going to be the maximum for an auto loan. And that's only going to happen usually on newer cars. So if you're buying a 2019 or 2018, you can usually plan on 84 months. After that, you're going to 72 and then 60. The standard used to be not even that long ago. I feel like it's probably only, like, from what I've seen, 5, maybe 10 years ago, auto loans used to start out like 48 months. Used to be 48 to 72.
Which is probably reasonable for depending what price your car is.
Yeah, and I mean, if you're looking at, there's still plenty of good cars for $15,000 to $20,000. Interest rates are a little bit higher now, so of course it's going to be a little bit harder to pay that out over a short time period. But the quicker you can get that paid off, the better. I mean, you look at, most people buy a house, $150,000 house, and finance it for 30 years. But there's also 15-year mortgage options too. So if you can pay it off faster, you're going to pay less interest.
Yeah.
You're going to be done with your stuff.
So what are the interest rates right now? Like, how low are they right now?
The lowest I've seen at the moment is like 2.74. But of course, about a year and a half, 2 years ago, there were interest rates for 1.5 and 1.9. So it's been a kind of a wild ride for the last year and a half.
Real wild.
Yeah.
Usually people don't use the term wild ride when they're talking about interest rates. Woo!
It's my world. I do. Change a lot.
So what else are you dealing with when you're not doing car loans? What kind of people are you dealing with? What's life like in there?
It's good.
All right.
Is that good conversation? I don't know. We do a lot of other stuff. I do a lot of financial counseling type stuff. People don't understand their credit very well, and that's probably my number one question. Outside of how could I buy this thing? Will you guys finance this? So, one thing I've noticed, a lot of people have medical charge-offs on their credit reports, and a lot of people don't know that they are there.
What does that mean?
Charge-off is basically whenever you have a bill due, or say you're quit paying your credit card. Eventually, that bank or place you owe money to will charge it off as a loss. They'll place it on your credit report. It's a big red "you messed up" mark saying that you owe somebody money. Those are all things that drive your credit score down. So, yeah, charge-offs.
But at like what amount are we talking here? Oh, kind of like huge
Varies.
amounts?
Yes. Well, not even that. So
Could it be you just missed a bill on accident?
I'll pull up somebody's credit. They'll have 3 credit cards, a couple of past auto loans or mortgage. From everything that I see, on-time payments are great. They're a model lending, individual. But then when I look at their credit score, it's a 642. There's a charge-off to AT&T for $39, and then maybe a medical charge-off for $72 medical bill that wasn't paid. And then he asked about the AT&T one, and they say, we forgot to take that router back whenever we finished our service with AT&T and switched to Cox. So they charged, they probably got a bill in the mail at some point or a request to bring it back and forgot and moved or did something, and then AT&T only sent the one request or sent 2 or whatever. They called them, they never answered, and they put that on their credit report. Dings them 50 points. They get a medical bill in the mail from going to get their blood taken out, forget to pay it. Eventually the hospital charges it off, and it dings their credit score. So that's something that should be on the top of everyone's mind.
Bills.
Download Credit Karma. Watch your credit report. Make sure nothing negative goes on there. And when it does, call and find out what it is, because that's a active, ongoing thing. If you're not paying attention to your credit, when your car breaks down and it is time to go and get a new one, your credit needs to be in the place where you can get that lowest interest rate to help yourself out.
And Credit Karma is free, right?
Yeah, Credit Karma is free. I mean, it's Credit Karma is just a soft credit pull, so it just gives you like a general outlet. The credit report that you're seeing whenever you're looking at your Credit Karma page is the same one that credit card companies, banks, all these places look at whenever they send you free pre-approval screening offers. So it's not your full credit report, but it's a pretty good picture and good idea of, is this a good person to lend to? So you're getting the same look as the credit card companies do whenever they send you those free offers. So whenever you're looking at it, my general advice to people is your score that you see on there, your actual score is plus or minus 50 points.
Oh, so it's close.
So
fairly close.
We're talking, it says 740 on there, you're either sitting at a 790 or a 690. It's usually going to be a pretty good rule of thumb.
Okay. That's actually helpful, because I know, because I'd be wondering like how accurate is this score.
Yeah.
So, but you have the special software where you get to see the real credit score?
Yeah, the real live credit, the thing that everyone wonders what theirs is. I get to see those every day.
Have you checked mine?
No, that would be illegal.
Oh, I didn't say that.
We're gonna have to cut this right now. Yeah.
How does that work? How do you have to get like what? How can you go in there? Like, does somebody has to request something? You can't just go in there and check credit scores. It has to be like, what are the reasons you can go in there and check credit scores?
So for us, we used to do like you could call and say, I want a copy of my credit report. And we would pull one and send it to you and charge you. And then, of course, you'd have to deal with the hard inquiry on your credit report too. But now we'll solely only do it if you're going to apply for a loan. And then we'll look at it then.
How much does it hurt you to get a credit report?
I deal with that question a lot.
You better answer
Common knowledge would have people believe that it's a wrecker, but credit inquiries only make up 5% of your credit score. So you can imagine 100%, or the best credit score you can have is an 850. It goes 850 to 350. So say if you have an 850, if you check your credit, if you pulled 45 credit reports in the same day just for funsies, it's only going to drop it down to like an 840 or an 835.
Oh, I might do that just for funsies.
So people are terrified, of pulling their credit, but credit is an instrument to do cool things that you want to buy with your own money. So if you really want to do something, being scared of pulling your credit shouldn't stop you from financing something that you think you need to.
You're like, I could get this, but I don't want to pull my credit report.
I hear that. It's a shame.
Well, Ryan, the timer just went off. Luckily, I turned the sound off on that thing this time, but we can see it.
Is it loud?
Yeah, it's like me.
It's really annoying.
Yeah, so I guess it doesn't matter that I turned the sound off because I just did it for you anyway.
Thank you.
Thanks for coming on.
It was a pleasure.
Anything you want to plug? You want to throw your Instagram handle out there? You got a business you're trying to start? Any shout outs? This is your time. This is your moment.
It's my moment.
Or not. I can just cut it off. Whatever.
Yeah. No plugs for me today.
All right. Well, thanks for coming on and come back soon.
Woo!
I love talking to my brother, but that was a new experience talking to him on a podcast. And I hope he comes back and does it again soon. I hope that was an interesting or an informative episode for you guys. If not, that's all right too. But anyway, if you like this episode, please let me know. If you hated this episode, please let me know. And if you have any ideas for future episodes, please let me know. Thanks so much for listening, and I'll see you next week.